One of the series that I've been really excited to get into this new year have been subscriber portfolio reviews. This is a series where you guys send me your dividend stock portfolios and I go over the companies that I know, provide any constructive criticism, and overall rate them out of 10. Last time we reviewed the man, the myth, the legend PK Investing's portfolio, and today we'll be reviewing Jonathan Judas's portfolio. Now, Jonathan runs a Discord and a TikTok as of now at the top of my head. He probably is doing more stuff right now, but I'll definitely link it all in the bio. I really suggest you join the Discord. There's a ton of people on there. I'm in it. I'm usually active on it. So go check it out and join. And do you want to have your portfolio reviewed? And are you interested in dividend growth investing? Well, if so, this is perfect for you. Just email me. My email is in the description, ryandingler44@gmail.com. Make sure you're subscribed to the channel because it wouldn't be a subscriber portfolio review if you weren't a subscriber. Wink, wink. We're trying to hit 150. Speaking of subscribe, make sure you guys subscribe. I'm trying to hit 150 by the end of the year. That's my goal. Thank you all so much. I upload every Saturday. Smash the like button. Let's get right into the video.
Hello, I like money.
Alright, so as I said earlier, we'll be going over the companies that, I'm pretty familiar and comfortable with talking about because I probably don't know some of these companies, to be honest with you, and I think it would be unfair if I were to, be criticizing or giving positive feedback, and I really don't know what it's about. And by the way, if you guys do have any questions for Jonathan, I'm sure he would be happy to answer them in the comments section, so leave that down below. And Jonathan, a question for you. What is your goal with this portfolio? I should have asked you before, but I didn't. Alright, let's get started. So the first company that I see that I recognize and love is Southern Company, stock ticker SO. Now you own 40 shares of Southern Company, so you are definitely getting a good amount of dividend income for that every year. I own it too. I think it's honestly, utilities, especially Southern, are one of the safest plays. They aren't going to provide you great capital, capital gains growth, maybe some stable capital gains, nothing crazy, but that dividend income is so attractive, and that's why I love to invest in it this new year. Next, I see you own 10 shares of Hasbro. Hasbro, I only have 3 shares right now, but if I had a lot of money, I would invest in it. I think it's a pretty stable, safe company. They do have a pretty nice dividend too, but it's one of those companies, it's not like my favorite, but I think it is a really good company. So I definitely approve of that. Palantir. Alright, that's pretty interesting. Obviously it's a riskier play. You don't have a ton of money in it. So, I'm fine with it. It's not a huge part of your portfolio. So, you could have some high upside with it. But if I had the money, obviously I'd sell it and put it all into like a dividend stock. Next we got 20 shares of Vici, which puts a big smile on my face. Because if you guys watch the dividend portfolio update, you guys would know that I own Vici, and I really love Vici. I think they're a really good reopening play, and I just really enjoy them as a company, and I like their management as well. Also, inflation. Let's talk about that. So REITs are a good way to combat inflation. If you didn't know, I did make a video about that. So I think, investing in REITs right now is pretty smart to do, at least in the short to medium term with inflation, roaring right now, quote unquote. Next, I see you own 10 shares of Callaway Golf Company, which is pretty cool. I haven't been golfing in a while, but I think that they do provide a really good economic moat with their products. Next, I see you own another 20 shares of Duke Energy, which again puts a big smile on my face because you know me, you know how much I love utility stocks. Duke Energy, I think it's a really good company. I did some research on it. Right now it's not in my portfolio, but long term, it's a company that I'd like to buy into eventually. Maybe even this year, but I wouldn't bet on it. Next, I see you own 1 share of GE. Definitely interesting. And let's move on to the next part of your portfolio. Let's start off with DraftKings. So you own 30 shares of DraftKings. Obviously, DraftKings doesn't pay a dividend, but they just legalized gambling in my state. For DraftKings, at least, I've been getting a ton of ads for that recently, and I think it's a really good play. I think it's really volatile right now because I think it's one of those stocks, along with like Tattooed Chef and Palantir, that I think that's actually like a really good company. But like they've really caught up in the headwinds a lot, with Wall Street and all that. So I approve of that long term, definitely for sure. You got 22 shares of Chevron, which I do like. Obviously, I exited my position out of Chevron when I needed money to allocate elsewhere, and it didn't make the cut when I trimmed down my portfolio, but I definitely approve of it. They have a pretty nice dividend too, so you can definitely use that dividend income to invest elsewhere if you'd like to. Next, you get 10 shares of Lyft. Um, I kind of have mixed emotions on this because I'd honestly rather be in Uber right now, but obviously that's your opinion. Next, we got Penn, and Penn's really interesting because they're like associated with Barstool or something like that, and they're gambling, and I actually like this play, even though I'm not like huge on gambling stocks and all that, but I definitely approve of that. It has some good growth potential in the future. Next, you got 10 shares of Sony. Obviously, they made a lot of money with their PS5s. I was considering buying in before they made, like at 60, 40 something dollars before, they spiked up, which I do kind of regret now looking back at it. And this even puts a bigger smile on my face. Now we got 40 shares of NextEra Energy. This makes me very happy because not only is he getting some good dividend income with that, but I think he's getting some good capital gains income with that long term as well. If you're new to the channel, I am really bullish on NextEra Energy, and I think that they're making utilities like cool to own again, along with Southern Company with their like nuclear projects and stuff. But I think it's a really good company to own. Morally it feels good to own it because they're doing the wind and climate change and stuff, and I'm sure they're probably benefited by Biden too because I know he's all into that. And all right, next we got Waste Management, 20 shares of that. I like that a lot. I think it's like honestly, again with the utility stocks, I think it's one of the safest companies in the stock market. I thought to myself that's my logic for investing in the company. I only have one share right now, but I'd like to buy more. My logic for investing was the world's never going to run out of trash, and they're, in my opinion, the best trash stock, no pun intended there. Next, we got 10 shares of Home Depot. I really like this too. I would buy in, but as you know, I don't have fractional share trading, and I think it is a little pricey at the moment, but definitely a position that I approve of and a really good long-term quality stock. Next, I love this 10 shares of Microsoft. Um, Again, top three position in my portfolio right now. I'd love to buy more if it weren't $300. Um, but I think they have really good dividend growth potential, along with capital gains potential, as you would know. And lastly, we'll go over Costco. He owns 10 shares of Costco, and I think Costco is, again, one of those best stocks right now in the stock market for not only dividend growth, but, capital gains growth as well. And I definitely would love to add to it if it weren't $600, of course. Alright, so I know I didn't go over like all the positions, so this may be a little skewed, but I'll be giving him a 7.325 out of 10. And I think he has, you know, I'm saying this in the nicest way possible. I think he has too many positions. Looking back at it, he has over 50 positions in his portfolio, which is a little too much for me personally, but obviously it's personal for everyone. I am a little confused on like the goal of this portfolio too. I should have asked him obviously, but I'm sure he'll leave it in the comments. Cause I see a lot of like good high quality companies, and then I just see like Palantir, and I'm kind of confused. So, Jonathan, let us know in the comments for sure. I'm sure he also does other forms of trading too. So this is only part of his, stock market wealth, so to say. So yeah, in conclusion, I'd say a little too much positions for my comfort, and I'm not really, too sure on what the goal of the portfolio is. Like, I feel like all the positions are scattered. Like, there's a lot of high quality, and then there's a lot of low quality at the same time, which obviously could have good, low risk, high reward. So, guys, let me know in the comment section what you think of his portfolio. What would you rate it out of 10? Yada, yada, yada. Make sure to join his Discord and my Discord. Link in bio. Subscribe to his TikTok, follow his TikTok. Subscribe to his YouTube channel. I'm pretty sure he's going to start pumping out content there. Make sure to like, subscribe, and do dividend stocks, not drugs. Have a good one, and happy Halloween.